Hello, welcome. We will talk about the basics of technical analysis on support and resistance levels. By the way, I have created a page on Instagram where I will be posting something, so make sure to subscribe. All the links will be in the description. Let's get started. I have already stopped trading on my deposit due to the new year. I do not trade a week before and after the holidays, as the market becomes extremely unstable. Therefore, today, we will have a theoretical video on support and resistance levels. So, let's take a look. First of all, let me tell you how these levels are drawn. Look, some draw levels only based on the bodies of the candle. That is, like this. The body of the candle is this thick area. Just to remind you, some draw the level only based on the shadows of the candles. That is, like this. The shadow is this little wick from the candle. Here is such a little line. Levels are built based on bounces, obviously, meaning we find the spot on the chart segment where the price bounces most frequently. Here are our bounces. Here is the bounce. Here is the bounce. So this is our level. Therefore, it is most accurate to construct an area of support or an area of resistance. This will make it much clearer. Look at how we draw the area. We draw a rectangle like this through the shadow of the candle and through the body of the candle. So here is where the bodies of the candles approximately start. Here we have the first line, and the second line is where the shadows of the candles end. This creates an area like this. Now, why do bounces occur in different places? For example, let's take the same level that we looked at. This is the level, 109, 140. I draw a line like this. The quote 109, 140 is our level. In the market, real people are trading, and of course, not all of them are perfectionists. This means they can place pending orders. Levels, by the way, are clusters of orders. They place pending orders a few points below or above a certain mark. For example, there are several orders in this area. People were focusing on the level 109, 140 and simply placed orders, say at the level of 109.139 or 109.142, meaning in different places. I think that's clear. So, now let's clarify the terms. We have a support level and a resistance level. Let's take a much closer look at this situation. Let me carefully and precisely draw a line in green, or rather an area. This is our very important and crucial support level. And I will draw the resistance level in red for you to see clearly and easily. Something like this. Support is always located at the bottom in the market, while resistance is always at the top. This generally depends on the price location. Typically, so let me just draw it again to make it a bit clearer. Look, the price is right here, right here. So here, there will definitely be a resistance level for the price above. Then we see that this resistance threshold is indeed broken. And now for the price, in fact, this resistance area becomes a support level. This is how it all works. Above is the resistance level, below is the support level. So there are also terms like bullish and bearish. Let's quickly clarify this as well. Bullish refers to a trend that is moving upward, meaning it is going up, and gradually the lows are increasing. Therefore, it is moving higher. This is our bullish trend. There is also a bearish trend. This, of course, refers to candles going down. That is, in a downtrend, the price moves down, and gradually our highs decrease. As far as I have heard, these terms exist because bulls attack their prey from below and upwards, meaning they lift it up. Bears, on the other hand, attack their prey from above downwards, swiping at it with their paws. As far as I remember, this is why such terms came about. But this is just for your memory. So, why do bounces occur at levels? Why do breakouts happen? And why do these levels work at all? And how are they formed in the first place? Levels are psychology. In general, the market is psychology. It relies solely on people's psychology. Levels themselves mean nothing. They work only because other people use them. That is, the market crowd visually sees the level and, naturally, takes advantage of it. If the levels were not visible visually, then they essentially wouldn't exist. I think that's logical. Let me explain using the example of Fibonacci levels. Let's zoom out our chart a bit. Let's find a really very good spot. For example, right over here, in this exact spot. So what are Fibonacci levels? They are essentially virtual levels that, in essence, have nothing to do with price movements. Well, now I will draw them, and they will work. They are drawn from the maximum to the minimum, just like this. As you can see, I simply drew a diagonal line from the maximum to the minimum, and we have established levels. Why are these levels effective? Since many traders in the market use Fibonacci levels, we can see that the price reacts very well, and often very well indeed, to these levels. Here are our reactions to the Fibonacci levels. The performance is exceptionally good. Everyone uses these levels. Now let's consider, for example, the MA line. This is also a kind of level for us. Let's take a period of 100, just like that, for instance, perhaps. And we will see that the price also reacts to this MA line. Why? Because there are people in the market who use MA lines. Therefore, they take some actions when the price approaches this line. Let me increase the size a bit. So look. Again, if the price is below the level, then this is a resistance level. If it is above the level, then it is a support level. The same applies here. Naturally, levels can be not only like this. Levels can also be, for example, a trend. A trend is on the rise. I draw a line through the bounces from the level, which is the support level and the resistance level. Here it moves within an ascending channel and also within certain levels. In fact, indeed, actually. And in general, the market price always moves from one level to another level. This is a fundamental market law. Since prices need some space to start and take action, there are strong levels and weak levels, global levels as well as local ones. Weak levels are our usual local levels that the price passes through easily. Here, I draw ordinary local weak levels. The price reacts to them in some way, but it breaks through them very easily. Strong levels are certainly very difficult to break through indeed. Let's find a strong level on the numerical time frame. Well, let's say we have a support level at the bottom. We see very strong reactions from this level. The level is strong, and the price cannot break through it. By the way, look, the sharper the bounce from the level, the more impulsive it is, the stronger our level becomes. That is, we see a formation in the shape of a V when bouncing off the support level. The price approached here and was significantly pushed upwards. This clearly and definitely indicates the strength of our level. Therefore, if the price approaches this level once again, we can indeed expect a similar reaction. Clearly, we can see that the price has approached this level, as we can observe. Here we have a strong reaction to the increase. The larger our time frame, the more significant the level will be. Let me, for instance, for example, draw horizontal lines here. These are our usual levels. Now let's take, for example, the daily numerical time frame, even the 7-day one. And we see that the levels I drew become one level on the 7-day numerical time frame. Here is our support level, also a resistance level. This means that within larger time frames, there can be a bunch of local levels on smaller time frames. This is clear. The larger the time frame, the stronger the level. So, let's now talk about breakouts of levels. Again, I will draw the resistance level and the support level. Look, the price has been moving in this range for a long time. It goes from level to level. And what happens next? Next, our lows definitely start to gradually rise. Here we see that our lows are slowly but surely increasing. What does this indicate? It suggests that the sellers are losing strength more and more. In other words, the sellers are gradually shifting and repositioning their positions towards buying. And when this quote, that is the resistance level, indeed becomes unprofitable for selling, then the price breaks significantly upward. The rising lows that I have drawn here indicate that the interest among sellers is decreasing. Therefore, we should expect a breakout upwards in the near future. Let's also take into consideration a retest of the level, that is, a retest after a breakout. Again, I draw the resistance level. We can see that the price has broken the level. It then approached again the level that it had broken, and there was a strong reaction slightly to the upside. That is, the resistance level has become a support level for the price. In fact, retests of broken levels are considered the safest entry point. But again, everything here needs to be confirmed. For example, here we saw a reaction to the increase from the broken level. Therefore, we can expect further increases if we see some confirmations. The price may, for example, also calmly return to the level within this range. But by default, the price tends to bounce off the level it has recently broken through. And again, yes, psychology plays a role here. That is, if someone sees a breakout of a level, where is it most advantageous to buy? Naturally, at the broken level, at the support level. That is why there was a strong reaction to the increase. Buying under these conditions is the most advantageous. Therefore, retests of the levels are considered a good starting point for our price. So, in this video, we talked about support and resistance levels. In the upcoming videos, we will work with these levels. We will be looking at figures from technical analysis, examining patterns, price action, and other related subjects. So, click the bell icon to not miss the next useful videos for you, and make sure to hit the bell icon. Be sure to like this video if you found it helpful